Hello and good morning, dear ladies and gentlemen and traders around the globe. We from Admiral Markets say welcome to our real-time daily trading idea webinar. In this webinar we have 5 days, 5 traders, so 5 different trading styles, and we would like to discuss the topics of the day, creating some trading ideas, and for sure answering here your questions. But first of all, we need to say here is our risk disclaimer. Be aware that Forex and CFDs are leveraged products and can result in losses that exceed your deposit. So they maybe not be subtitled for everyone. And please be aware that all we are showing and presenting here today is just a personal opinion of our traders and not an advice for investing. Here you see a picture from me. My name is Tim Temp and I'm a sales guy from Germany. So here you have some other pictures from our traders, and we do this webinar always in co-moderation. Today is Friday, so today we have here the pleasure with Dirk. So later more about Dirk and his trading style. Here we have a quick overview of some of our offerings. For example, here our bestseller, the DAX 30, with a typical fixed bet of only 0.8 point during the main trading hours. These and other products you can also trade in mini contracts. On the right side, you see some of our awards for our customer service. If you have additional questions, feel free to contact us. Here you can see our telephone number and as well our email, and an additional info for you. This is a live trading webinar, and these webinars are recorded, so later you can find it on our YouTube channel. So here's another picture from Dirk. So you have the screen, Dirk, here. I said good morning to you. Maybe you have here some good trading ideas for us today.
Yeah, good morning, Tim, and I can assure you I'm not looking like this right now because I made myself a hot coffee and it's still hot out there, so that was really a big mistake this morning. All right, let's have a look at the current situation at the markets. You may scratch your head what happens to a couple of indices like the DAX or, for example, other European indices. Or you may scratch your head as well about the movements in the EURGBP or the Euro-US dollar this morning, because there was a kind of a spike up, and everybody wrote. So especially a couple of the big companies like CNBC or Bloomberg or all these agencies you probably know, they wrote about the European leaders. Which gathered around in Brussels and to find something around a migration deal, and now the kind of migration deal could have been reached, and this has been a marathon sitting. So they must have been thinking about that stuff all night long. However, you will like it or not like it. You will have a look at the markets, and they obviously like it. So that's what a couple of guys write. But in fact, look at your calendar, look at the month. It's the 29th of June, so it's Friday. And it's not only the end of the week, it's the end of the month, it's the end of a quarter, and on top of that, it's the end of the half year. So that may give you an answer of what is happening right now, and even the last day already. A couple of those guys being short in a few indices and a few stocks or stuff like that, they are already about to buy them back in. So to simply change from going short to maybe being neutral or holding on or waiting for the next moves. So that's what's happening today and even yesterday. Things about, if you look right now here, we got the stock of the German bank, the Deutsche Bank, which did not pass the stress test in the US yesterday. So if you had a look on that one, even this morning, even that stock is going up because of those things I told you about these last day of the week and last day of the month and quarter and half year. So there must be another spike up the road. Could be heading to a little bit more to those old levels I already told you. By the way, a couple of weeks ago we spoke about that stock and drew that blue trading box where it possibly will be going down there. So if you see the level of that trading box, it really went down, almost down to that level we draw here around the 862. Okay, going back to the DAX, which is far more important for having a look on, we will be going to the daily chart. As you already know from last week, I always use those blue trading boxes here, and yeah, draw that stuff around the 12,440s. And if you remember last week, I tried to draw something with red lines, and that later on looked like a face, and a really sad face, which is going down because of being a bull in the market these days is not very favorable. And you possibly remember I draw some lines around here where the market could be heading to with so-called Fibonacci projections. So far so good. In fact, the market went to those 12,100s and now back on fire. But what would be a nice strategy? You already see that one in the terminal right here. It could be nice to place some shorts just to sell these bumps, these daily bumps. And if you go on maybe on the 1 hour chart, we'll be closing that one, and just widen the picture for you guys that you can probably see more. You on top will use the Fibonacci tools as well, from the high to the low, and just draw yourself a couple of possible next roads up where this move can end up. First of all, it may end at these 12,440s if we reach it. If you go to the downside, and that's what I'm looking for, it's something like a sell of this big bump up to the end of the month and quarter and half year, could be the next target to the 61.8 level again. So this is the level I draw up here with the 61.8, which would be around the 12,310, 12,315. If you have a look at a couple of other news, of course, don't be too confused with all the news you get. Get concentrated on your special trade you want to trade. For example, just get concentrated on the DAX, or get concentrated on one single stock, or as well as if you have a look at those EURGBP, for example, I was talking about. If you guys checked out Twitter, I used that EURGBP trade in 2 steps. I started a short scenario a little bit down the road, and added at 88.45 this morning. I really had some trouble and thinking about deleting that stuff because I wasn't sure about that it might be spiking back up to 89s and even 90s. You never know on these days, but a couple of minutes and 15 to 30 minutes later on, it went back down the road, so almost to this the second entry point. So it would be nice to see the 61.8 level here. Of course, must from this point on, because it comes from the upside to the downside, it is the first support right here. But if you look at the daily pivots, it didn't manage to get up there through the resistance 1 level for a longer term, and it went back down again. So it might be retesting the 088s very much soon, probably today, even today. Okay, as you can see, we will be changing the windows and changing the trade materials here quite quick, quite fast. The reason is because I don't want to lose any kind of a single pip, and that's the reason you always need to maybe modify your order, or to modify the situation here. So if you look at the entry point of 12,377, and right now there's still a stop loss of 12,427, you might think about reducing that risk, or even if you like to get rid of that risk in the way you just place your stop loss at the entry zone. So that's 12,377.25, or to type it in exactly. I leave that take profit open just for one reason, because possibly if there is a spike to the downside, you might not get the full party. That's the reason. Of course, you can place it take profit around the area of the 61.8 level. That's 12,314, as I said. But on top of that, you might be earning a little bit more. If you build up positions with, for example, with the size of 2 or a size of 3, that's quite more comfy because you just close one lot after a couple of points, a couple of 10 or 20 points like that right now, and move the stop loss to the entry zone. This morning here just started with that one lot size. Okay. Going back to the daily chart and to just delete all that stuff here just to get a naked chart again. Of course, I could open a new one, but I'm just doing it that way. And having a look at the current bigger move where could be heading to is just a short view to the all-time high, to the last low. Let's check out if that low is correct. That's the low of 11,692. And that's the low of, yes, so that's correct. And just in case of there's maybe an interesting level where the market is possibly heading to the upside, just draw that stuff in. So that's 12,420s. All right. We will be deleting that one here as well as fast as we can and do the way around from the downside to the last upside to the last high here. And we'll be doing that again. So that's what I said almost last week. Nothing big change because the lows and the highs are still the same. Is the 50% level here as well, where you probably mark it with another horizontal line. And now delete the Fibonacci's. Damn. So that's the way we do it. Okay. And just to insert that shapes again, so that rectangle stuff again, just to see where this possibly reaction zone might be. Okay. As you can see, we already lost a couple of points. Not much, $1 to $3 bucks, but it's possibly quite quick. Days like these, probably you see a short pop up and you're just done, just cooked, you're just out of the position. But in fact, with that one, you're not risking anything right now. You're not losing any buck. So that's the most important thing. It's very kind of annoying just to lose a couple of pips if you had a good week, for example, and just to crash a lot of pips at the end of the week. Shouldn't be done like that. Happens to me, of course, happens to me sometimes as well. I just had a really bad trade that week at the DAX because I was expecting that move we had today, 1 to 2 days a little bit before, but that was not the case. Thanks to politics on top, that made a little bit of negative surround mood. Okay, let's see what happens to a couple of news around that. Just be checking that German stuff from this morning, for example. If you have a look, of course, don't ask me about the World Championships in footy. That didn't work out well for us. But if you look at the economic data this morning, for example, you got a lot of stuff like import price index, which went up to 1.6%, and even on top, which is very important, is the German unemployment rate. And if you look at that in June, it went back down at 5.0%. So that's another reason maybe to party. But in fact, a couple of those numbers, you always know how statistics work in a couple of countries. Everywhere they're different, of course. It's not the 100% party to rock with. In the long run, it will be very much important to see how these effects of trade war stuff with the US and China will go on and will have effects on German data as well. Okay, we are going back to one currency pair. We spoke about that currency pair last week, as you may remember. We spoke about a possible long setup, and of course I warned you that this could be a very, very bumpy road, and it's not easy to get in this currency pair with a a small stop loss scenario. On top of that, you don't want to risk a 100 or 150 pip stop loss. You don't want to build up the trade like that with 100 to 150 pips stop loss scenario. But imagine if you look at the bigger investment banks. Let's start with Bank of America, Merrill Lynch, going back to Morgan Stanley, to for example, JP Morgan or Goldman Sachs, all these big US investment banks, or the UK banks like Barclays or whatever the names are. If you read setups, forex setups from them, and their clients get that every day, you see scenarios like they are operating with a stop loss room around 100 to 200 pips. So there must be a reason for that. Of course, they know that because they know that bumpy road may kill their clients, and they don't want to do that to them all the time. And the most important thing is if you have a big account, and those are the bigger clients with the really big accounts like companies, where they are trying to hedge or trying to have some risk sold and bought in the market. That might be the reason that they are operating with a bigger scenario. So if you look at that, building up that one with a box like that, they're operating with a much bigger room, and maybe even advise those clients to be aware that a short spike could even go back down to 114 before it starts going back up to this 117 level, which I marked with a blue box here. So this would be the next trading scenario to the upside. If we look at highs, at new highs to be built before that, we will start hovering around this scenario at 117.60s. That looks much more as a lot of room left, you may think, but sometimes in that kind of currency pair, it gets very, very fast. It gets very quick. If you look at a couple of candles back there in the history. All right. On top of that, when you talk about Forex, you always need to be aware if you just will open another trade here just to show you that one. Of course, this one here is a demo account, but just to have a look, if you, for example, open a EURGBP short, let's say a mini lot, so you sell it, and you see that one in the terminal, of course, after really 1 second, and you of course have the stuff like the stop loss scenario, which you definitely don't have to forget. Always place something like that. I just start that with 75ers just to use that one as a demonstration. Take profits. Of course, we are going to the EURGBP. Take profit zone would be, for example, the first 50s here, the 088. So you can type that in and modify the order. Of course, type that in and take profit at 088. For example, here, just to be sure that nothing happens, everything is running automatically. What is going on right now? What happened? Mistyped. Modify order. 088.52, 088, 088, 02, for example. What the hell is going on right now? Doing that again, something, whatever is hanging here. Now it's working. For some reason it didn't want it, but okay. So you always prepared with that. Everything is running automatically right now. You don't have to do anything. You might be stopped at 88.75. You might be take profit is at 88. So if it goes back down there, when it's cashed in, and you see that stuff like commissions and swap. So if you look at swap, for example, that's a good pair I want to explain that with. If you go short EURGBP, you are earning overnight. You know what I mean? You're earning overnight means that you're earning interest rates on top of that, because the pound is at 0.50 interest rate, and the euro is at 0. You can stay at these as kind of examples. If you have a look at euro US dollar, same stuff, but even more interest rate. If you go short euro US dollar, you're earning the swap every day, every night, overnight. So in fact, with Euro-US dollar, the interest rate differentials are much more higher. Euro 0, US dollar right now close to this 175 2% gap. So big difference. So if you go long, and if you're not stepping into the right scenario, and on top of that you lose pips, and on top of that you lose interest day by day or night by night, if you say that. So just to explain that, and that's the interesting stuff, because why do I explain that to you is if you look at, for example, Euro CHF, so the Swiss franc. If you open a long right now, if you open a long and go long Euro Swiss franc, you earn interest overnight, because the Swiss franc has an interest of minus 0.75, and the euro is at 0. So that means you're earning. So the difference is benefiting you as a euro investor. So that might be a reason it might be getting back up very much soon. And that is the reason even big companies and big investment companies are thinking about when there is safety needed, they will be getting back in Swiss franc. When the risk on is getting back in the markets, they may be flying out of the Swiss franc and going back up in the euro again, and that may lead to a big move, which we already saw a couple of weeks ago. If you check that out, you will see that in the history. Close that window here as well, and go to just a weekly chart, how fast sometimes things like that move. And you see the beginning, the levels like, for example, the 0.14 level, rocking up very, very quick up to the road until almost the Swiss franc peg, the old Swiss franc peg of 120. And if you check that out, it's simply worked out in 1, 2, 3, 4, 5, 6, 7, 8 in almost 8 weeks. So that's not much for a longer term scenario. This is nothing. This is nothing to trade intraday for a couple of pips. I can warn you. It's something for maybe like a swing for a couple of days into maybe a week or two. That might be something interesting. All right, going back to the DAX, as you can see, of course, a couple, oops, I misguided by that one. I wanted to open the terminal. When you see stuff like that and you see your pips already running, you might be really burning and like to cash in maybe 100 pips a day or 150, the really big move. But forget about that. Just close it. Cash in 20 or 30 points, and you'll be lucky. And if the DAX, for example, comes back up again and even rockets into the 12,400 zone right now, you will be shorting that bugger again. By the way, this one could be closed here as well, even if that's a really small win, just to get rid out of the terminal here. So that was the quite of the example of how to really deal with that stuff. You can enter and you can exit a trade as you like. Nobody tells you. You're not working for a company. You're not working for a bank or a fund or whatever. You're managing your own money. And as long as you can do that, you need to be aware. You always need to look into the mirror and say, what did I do wrong this day? Because I was burning and burning like a psycho, and always thought about the big 100 numbers, the big figures. And in the end, I went out with nothing, and even a big minus, a big loss. So what happened to me? So that's the reason why you always think about just taking winners. It's no shame to take small winners. Nothing like that. If you do that a couple of times or 10 or 20 times a day, you'll be having 100, a big figure in the end. Okay. Having a look back where we started, the Deutsche Bank share, that's what I wanted to talk the last minutes here. Let's check out if we can, what happened to that. Okay. As you can see, it is not very perfect to enter a trade when the skyrocket already launched. the rocket already launched, and as you can see, that one is coming back. 940 was a level where we talked about in the beginning. Now it's 927, and if it comes back to that 915, 920s, it might be getting interesting to get back in and try to let's say build a position with one or two sizes. Then you can probably take that out in a couple of weeks. Everybody's talking about Deutsche Bank. Everybody is negative. The whole sentiment is very negative. So I wouldn't be surprised if we see a move back up into the double digits. So like 10. It won't be easy for them, but let's see when the really bad numbers are out, and maybe there's a kind of a relief rally, a more relief rally like this technical stuff from the end of month. Or end of quarter stuff today. Okay, I spoke a lot. I'm sorry, Tim. I forgot to ask you about a couple of questions.
No, Dirk, don't worry. So we are just listening to your words and what's going on in the market. So it's very interesting. So don't be shy.
Okay.
Yeah. So we have some question for exciting here. For example, some markets like gold. So maybe we have a look at this one.
Okay, just before opening that gold stuff, just checking that stuff again, 1250, 51. Gold. Gold is something like really crazy, getting crazy to the downside. Everybody is getting crazy, like those gold bulls, and they're asking themselves what the hell is going on. If you look at the future interest rates, of course, it might be getting interesting not to be invested in gold because they are going up. And if you look at the Fed Watch tool, which gives you a hint where the U.S. interest rates will be going to until the end of the year, from percentage points, you must be calculating with 2.25. So that's where the interest rate of the U.S. Right now is traded and signaled. So those future markets are. Speaking about the so-called probability of interest rate hike, the next sessions, the next month ahead, and until the end of the year, they are pricing in a level of 2 to 2.25. So this is something like when you're investing in gold, you might be aware of, is it really favorable to stay in that one? If there is no interest in gold, it might be getting more expensive. It might be getting more serious when I start first position and then I'm crashing down $50 again. So just have a look at the daily setup and have a look at the bigger scenario where the market could be heading to. You see that low, it's from the last year. The low is at, I'll mark it for you, just hold on a second, where is the point? There is it. It's 12,360, excuse me, 1,236, that's the way. And the last high is at 1,366. So if you look at that, that might be getting interesting now, and that the market is running into that last low here. So if you are a gold bear, you might be preparing yourself to think about the next exit probably, or to manage your gold short to run into that scenario, to run in that area. You might be placing a profit zone, whatever you do, however you do it. But this is in fact the next scenario. So shapes, rectangles again, trading box like that, always do that. So if you think about entering gold, if you think about probably building a first position, this might be the case at around this scenario between the 1240s and 1235s. If you have a look at the downside risk, of course, there's still plenty of it. You might be interested in those two levels, which are around these projections, Fibonacci projections, 138, 161.8. So in fact, the market could be running into this. If you have a look at these levels, go back in the chart technical history here, and you will be seeing where the gold price is coming from, and it's even went really slightly above that 1,100 level, if you remember that. From the end of November, beginning of December in 2016. That's where it came from. All right. If you have a look at the fundamentals, maybe I told you that last week, I'm not sure about it. If you have a look at the current gold price scenario, we are running into the red zone. If you look at the candles, 2017, where is the beginning of the year? It is around here, I guess. Let's see, that's the first January candle. Yes. So we are around a level of 1,306 where we opened, and where we closed was 1,317. So it's not a big mathematics to see that we are underwater in the year of 2018 with gold. If you look at the fundamentals from the fund side, like ETFs, or let's say exchange traded commodities and big funds who are buying gold, real gold, for the investors, and they are still a little bit on the buy side. They're a little bit in plus still, so they are not giving away very much. So what is happening? What is really happening? Why is it going down that much? First of all, same stuff like I told you about the currencies. It's the end of the month, it's the end of the quarter, and it's the end of the first half year. So there might be a shift, positioning shifting. That's the reason it might be getting down there. Secondly, might be something like a rumor I'm spreading. I'm not sure about it. I'm not the one who likes to spread rumors, but what if some kind of a state maybe is selling gold massively because of some serial problems? Thinking about China, thinking about whatever. Just a thought. Imagine a state like China would simply sell only a couple of the golds China is holding, and they are holding above 1,850 of tons of gold, I guess. So imagine they were only selling maybe 2 or 3 or 10. That sounds not very much for them, but in fact it's very much for the gold market if the sudden sell is happening. Just thinking about it. It's just saying. Okay. So finally we made it around. It's 11:33. It's very late. We are very much overdone with the minutes. Hopefully you will be having some nice trades today, and hopefully, of course, a couple of good DAX trades as well. When you look at right now, you probably say, oh, this guy exited too fast. Yeah, you're right.
Okay.
I exited fast.
Okay, Dirk. So yeah, as you said, right, we are much over the time, but yeah, I think it's okay because yeah, you told us some interesting stuff here and what's going on the market, and yeah, as you said it, like yeah, it's a half of the year is done, so another half of the year is coming. So yeah, we are looking forward what's happening the next days and a couple of weeks. So yeah, thanks dear listeners for joining us here today. I wish you all a good and easy weekend. We are back at Monday at the same time if you like, and yeah, Dirk, we see and hear us next week at the same time. So some last word from you if you like, and I said bye bye and have a nice day.
That's the thing I already spoke about, and I'm just saying the same. Bye bye, have a great weekend, relax, and be prepared for Monday. Thank you.